brands business has got a portfolio of licensed brands. So we do all the premium brands under the brands business, and we do all the value brands under the retail business. The premium brands, the licensed premium brands being Arrow, Izod, Gant is a super premium brand. Then Energy is a brand which we have signed recently, which is again another super premium brand. US Polo is another brand, premium brand, which we do. And Flying Machine is our own denim brand. So these are the brands which we do on the premium space. Then all our own brands, which are mainly the value brands, we do under the banner of Megamart. Megamart is our value retail chain. In fact, it's India's largest value retail chain. And some of the brands which we do in Megamart are Excalibur, Elites, Auburn Hill. These are basically shirts and trouser brands. Then we do Ruggers, which is a casual brand. We do Colt, Newport as denim brands. Then we do Karigari, which is a ethnic brand. Then we do Miyakasa, which is a home brand. Then we do Edge, which is a activewear brand. And then we also do the licensed brand Cherokee. Cherokee, in fact, is world's largest value brand with a turnover of around $4 billion across the world. So we do that exclusively in Megamart. So these are the set of brands which we do. The factors impacting the retail industry, of course, has been the main thing has been the real estate. If you had seen, particularly when the times were difficult, when the downturn happened, one of the things, all the retailers realized was all of us were running at a very high, rental costs. So that is a significant, I would say, a deterrent to the growth of retail. I think now the rents have, in a way, got of a bit stabilized. And the second thing, of course, is actually the productivity. If you really look at square foot productivity in India, it's not still in line with the international standards. So as a result, every single expenditure as a percentage of top line is slightly higher, and that actually impacts the profit margin of the retail industry. If you get these two things right, get more and more consumers into the store and make them buy more, and our per square foot retail productivity goes up, and real estate costs are under control, I think retail can do quite well. See, as far as we are concerned, we leverage a fair bit on technology. We have both SAP for our financial reporting, and we have Retech, which is the Oracle retail system, which is used by 20 out of top 20 retailers operating in our Megamart. We are completely online as far as every single transactions in our retail formats, which gives us a tremendous wealth of information about what sells, what is not moving, which in turn helps in our design and development process, and then we can take some quick action in terms of replenishment. Technology also helps us in auto replenishment of stocks, so that we reduce the out of stock situations at the front end. And we also do assortment planning using technology, depending on which stores do well in certain merchandise. We send more of that merchandise to that store. And we also use technology in terms of complete follow-up on our supply chain, the entire sourcing process. And we are now started using technology quite a bit in our CRM, so that we get complete information about a consumer, and then we are able to follow through with the consumer in terms of direct communication, and then giving some special schemes to them, and so on. We have started using business intelligence, so we have a good dashboard which helps our retail team to really focus on key issues on a daily basis. So we do use business intelligence. See, two of our main vendors have been Oracle and IBM. Oracle have supplied our ERP, and IBM has been our implementation partner. Whether every system which we have implemented have been implemented through IBM. SAP we implemented 6 years back. Currently we are doing an upgradation on SAP, which again is being implemented by IBM. See, we don't specify IT investments as a percentage. It's completely need based, and some year it could be high, some year it could be low. But whenever there is a need, see, we want to be really at the cutting edge in terms of use of technology, and that's what we are looking for. And we definitely use technology to improve our business performance. It's not using technology for technology's sake. So when we feel a need of using technology to improve business performance, we definitely use it. We don't sort of cringe on the budgets if absolute necessity is there of using IT to improve our business performance. I'm not able to say no to all our business enabler, but more important, I think, is we use IT to improve our business KPIs, the key performance indicators of our business, which, like any other business, it's all about top line, it's about margins, and it's about stock turns. And IT has to deliver whatever we are doing on IT has to contribute to improvement of these three parameters. I don't differentiate the KPI of a business head on the CIO. It's again the same sales, same margins, and stock turns. Technology, I think, will play a significant role because we are growing pretty rapidly. When organization is becoming very large, and particularly a fashion company like ours, which has got obsolescence built into the business model, technology is going to play a significant role in our scaling up process. I basically use BlackBerry, which is quite handy, to keep you updated and then wherever you are. So that's something which I use on a regular basis, and then I keep changing my laptops. So currently I'm using those Sony Vaio, the slim one, which is easy to carry around, so that one can use it wherever more comfortably.